Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This video is my thoughts on market happenings for the week ending November 19th, 2021. Firstly, the indexes for the week were all down with the exception of the S&P 500. Because it's one of my stocks, the Great-West Lifeco has joined its Canadian insurer peers by raising its dividend. The December payment will be 12% higher than previously anticipated, thanks to a sweetener announced this past week. This is thanks to the Office of the Superintendent of Financial Institutions recently backing off its pandemic-era prohibition on share buybacks and dividend hikes. The Canadian inflation is at its highest level since February of 2003. The cost of living jumped last month by the most since February 2003. The 4.7% year-over-year jump matched expectations and serves as a reminder of the reality we're all facing every day as supply chain problems and other forces drive up prices. Every major category tracked by Statistics Canada posted price gains in October, led by the 41.7% surge for gasoline compared to a year earlier. Meat inflation is also a real thing. Bacon prices jumped 20.2% year over year, while the cost of fresh and frozen beef rose 14%. The Canadian retail sales fell 0.6% in September. While that was a sharp downturn compared to August's 2.1% rise, it was far less severe than the 1.7% estimate. Interestingly, StatsCan said sales fell 1.1% in volume terms. As for the outlook, the data agency delivered a flash estimate for 1.0% uptick in October. In China, the overnight data dump delivered a little bit of everything. If you're a glass half full kind of person, check out retail sales and industrial production, which both accelerated and outpaced expectations in October. On the downside, however, there's disappointment in China's property sector as new home prices fell at a much faster rate than in September and investment decelerated. The Chinese real estate is experiencing issues as prices wobble, as is their credit market, including Evergrande, which was defaulting on its bonds some weeks ago. A couple of Chinese companies reported. Baidu beat estimates on the top and bottom lines for its latest quarter, while the China-based e-commerce company was benefiting from stronger ad sales as well as strength in cloud and artificial intelligence products. Alibaba, on the other hand, slashed its outlook for the fiscal 2022 revenue after intensifying competition and dwindling consumer spending depressed growth at China's top e-commerce firm. The disappointing forecast followed sales that missed analyst estimates for a second straight quarter. Alibaba posted a less than expected 29% rise in revenue for the September quarter to 200.7 billion yuan, which is 31.4 billion US, and it forecast a 20% to 23% growth in fiscal 2022 revenue, short of the 27% that analysts were projecting. Net income plummeted 81% to 5.4 billion yuan, lagging estimates after the internet giant marked down the value of equity investments. On Thursday, executives fielded a barrage of questions from analysts concerned about the longer-term picture for growth and Alibaba's efforts to fend off rivals. The lackluster numbers underscored the former stock market darling's struggle to revive businesses walloped by macroeconomic and regulatory turmoil. Turning to the US, there were 268,000 initial jobless claims, which is roughly the same from the previous month. The US Fed president term is coming to an end, and new candidates are being interviewed. Picking a different US Federal Reserve president would have market impact. The markets usually prefer a known quantity and dislike the risk of the quote unquote new guy. The Climate Pact conference finished in Glasgow with very little actionable firm commitments. We're also seeing political issues with Russia and the Ukraine, and of course, China and Taiwan. And in Europe, Austria's fourth national COVID lockdown will start on Monday and will initially last for 10 days. The country's unvaccinated are already barred from leaving their homes for non essential purposes. Starting February 1, Austria will make vaccinations mandatory. COVID cases are spiking across Europe, prompting many governments to ramp up uh, mitigation measures. This coming week, we're going to have US and Canadian companies continuing to report. There's going to be manufacturing PMI, there's going to be US durable goods and initial jobless claims and home sales. So that concludes the results for this previous week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.